Hey guys, I've added a couple of studies that sort of are all-encompassing studies, and so I wanted to do this video to show you how to set them up and make the most out of them. So what I went ahead and did is the two main studies, the ones that I'm going to be referring to here, are the time frame continuity study and the strat remix, and these already contain really the best of all the other more basic studies, such as the basic four reversal study, um, the candle and numbers. Eventually I'm going to be deleting these older ones, but I'm going to leave them there for now in case anybody's still interested. And so, for example, the time frame continuity study is going to contain the background color. Like, where is it? If we scroll down to here, the background color changing red or green if you have full time frame continuity to the upside or to the downside. It's going to have the same magenta and cyan lines that you see here, for example, where the cyan line indicates full time frame continuity to the upside and the magenta indicates time frame continuity to the downside. And basically all that means, by the way, is that each one of these time frames, for example, in this chart here, we have this is a 1 minute chart. So each little candle there is 1 minute. And then there's 5 minute candles, 15 minute, 30 minute, and 1 hour candles. And so those are all the outlined overlays. So each big black candle here, for example, is a 1 hour. These two big, smaller half hours, and then there's the 15 minutes, and then each individual 5 minute. And on the inside, you have the minute candle. So for example, here you'd have the open for all of this, well, almost all of this, the open for the hour, for this half hour, for this 15 minute, and for this 5 minute right there. And as soon as we go above that level, we have full time frame continuity to the upside intraday because it goes throughout these four time frames. We're above the open on all of those time frames. And so now the highest open, since this is also considering the 1 minute, the highest open is going to be this cyan line. Each minute is going to have its own open. In this case here, for example, you have the highest open was here, then we went below that, and now we're sort of in between the two over here. And the lowest open is always going to be the magenta sign, the magenta. So when you have full time frame continuity when we break above the highest or the lowest open. In this case, is the highest, and here above the highest we go down. The opposite happened. We have full time frame continuity to the downside intraday because this doesn't take into consideration the daily open, the monthly, weekly, yearly. So, anyways, this study already contains all of those elements: the background color, these horizontal lines, and it also has alerts in it. And so it's actually here, and here's the code for it if you're interested in it. But I went ahead and also put it up here so that it would just be readily available. It's one of the first things you come to, and that's the time frame continuity. The Strat Remix is the same as like the basic four, but it also has the Rev Strat, and it also has actionable signals, and it also has alerts. So without further ado, let's look at these two studies. And so the first thing you're going to do is you're going to click on that. You're going to go over here, click on View and Think or Swim, or if that doesn't work, as mine is the case with mine never works when I click on that. You have to highlight this, copy, then you go over here, open shared item, paste, preview, and import. And it'll give you the option to rename it. Be sure to rename it or else you won't know what it was. So in this case, we were looking at the time frame continuity. We're going to rename that time frame continuity. Okay. Okay. And we're going to load the other one, the Strat Remix. Same thing. We're going to go over here. Sorry about the barking dog. She thinks that there's somebody out there. Click on open item, preview, import. I'm going to call this one Strat Remix. Boom. All right, so let's load these studies up. Let's start with time frame continuity. Time frame continuity, right there. Okay, so when you load this study, you have to be aware of what time frame you're on with your chart. In this case, we are on a 3-minute chart. So Thinkorswim does not show you any multi-time frame study on Thinkorswim will not work if the aggregation, if the time period is lower than the time frame for the chart. So right off the bat, we're not going to need the 1 minute. And the other thing here is you've got all the way out to the year. But if you'll notice, this chart only shows 2 days worth of data. So it's not going to work for anything higher than a day. It's not going to show you a week, a month, and a year. If you wanted to do that, you'd have to go over here, time frame, and select as far out as you want, 360 days for a year. That's a lot of data that will slow down your machine a little bit. But, for my purposes, I'm only going to be doing day trading for now on this chart. So I just care about as far up as the day. And really, I'm not even going to set it using the day. I'm going to be setting it for these intraday time frames, which is the 3-minute, 5-minute, 15-minute, 16-minute. So you have to go into the study setting page and deselect or select no for the 1 minute because that's lower than the chart. And then we do want the 3, the 5, the 15, 30, 60. We do not want the day or anything higher than the day. So no to the week, no for month, no for year. We do want to show the lines. Those are these lines that I've been talking about. Right? We do want to see those. On this chart, though, I want to see them. I don't want to see them this thick. These are like pretty thick here. I have them thick on this chart because of all the overlays. I want to see these really clearly here. But here, let's just go ahead and make the thickness of 1 on those lines. And so we do still show them. And then the arrows and the labels and such. Let me show you the arrows. The arrows are everywhere there's full time frame continuity one way or the other. So they're just these gray arrows, as you can see, that point up or down for FTC to the upside or FTC to the downside. Because it's kind of redundant, and I'm already being shown that with the background color. I'm going to click those off. Turn that off here. So no to the arrows. I do recommend that you leave the label on because you'll notice a minute ago, this label went all the way out to the year, and now it doesn't. It just shows you the time frames that are in force that we're looking at. So this is just a visual reminder in case you forget, which time frames am I looking at? Oh, yeah, there's the 3-minute, the 5-minute, 15, 30, 60. Why is that going to matter? Because if you do a flex grid like this, then you might forget. You might be like, these show the day too, right? So you see it right there with the label. I just leave them. Plus, the label is going to tell you the price level for the highest open and the lowest open of the time frames that you selected, which is where time frame continuity up or down begins. So I leave the label on. I'm going to leave the label on, and I am not going to. There's the background check. Now look at this. FTC up, FTC up. That's a lot of alerts for time frame continuity, and it happens all the time. Basically, a moment ago where you saw all the arrows, every time an arrow pops up, you would get an alert. So I'm going to turn off the alerts because it does get to be a bit much. But I do want to leave the label. I don't want the arrows. And that's basically it. So now every time there's time frame continuity, it's going to change the background color, but I'm not going to get one of those alerts. And then you would do that on all the other settings. One thing you can do, by the way, is that once you've got it configured the way you like, you can go over here and click Save as Default. And that will be, every time you load that study, it will load it in that configuration. With this study, that'll be a little tricky. You can do that, but you're still going to have to configure all of the time periods whenever you go to one of these other time frames, like the 5-minute, 15-minute, 30-minute. Because again, in the case like here, for example, I forgot to turn off the 1. for the 5 minute chart, the one is not going to do anything because um, it's a lower aggregation than the chart, so it's not going to show you. So because I want to day trade, I'm not going to look at the day level or the week or the month. I don't want alerts. Let me turn that off. I really don't want alerts on any of these. So I'm going to go here and just bear with me and turn off, again, the 1 minute, 3 minute. We do want the 5. I'm going to turn off the alert. Everything else is fine. And then I'm going to go over here, do the same thing. Turn off the 1 minute. Let me see here. Yeah, so this is a 30 minute. So for 30 minute, look at this, 30 minute. So for this 30 minute, I'm not going to use the 5. I'm not going to use the 15. I'm just going to use the 30, the 60, and the day. And no to everything else. And no to the alerts. So you have to do this with each chart that you set this up on. And again, with these labels, you can double check and make sure here, like for example, that 5 minute, you want to make sure that you've got it set up correctly for the chart that you're using. By the way, if you leave that 5 minute or the 1 minute, if you leave a time frame on that is lower than the chart, it's not really going to change anything because it's just going to calculate that variable as current open. But just to remember that you have to reset these. So here we have 30 minute, 60 minute day. And over here, last one, we're going to go and turn off everything except for the 1 hour and the daily, I think. So the 60 and the day, yes, and then week and everything else, no. So we'll just, now we have it. See? So here we have a 5 minute chart. It's showing all the intraday, starting at 5 and moving up. 15 minute, 30 minute, and this one does show me the day, and the 60 minute does show me the day. That's how I like to set it up. You can do whatever you want to with it, but that's how I have it set up for the intraday time frames. The other study, once you've got that set up, you go in and you add the other study, which is that remix study, Strat Remix, okay? And let's load that and see what that looks like. And so right off the bat, you're going to be getting these labels up here that are they're color code. It's a legend. It's just to tell you what each of these candle colors mean. So this is also kind of redundant, but I'm leaving it because, for example, on this study, because of the overlays, the original the regular candle colors are kind of obliterated. But with this setting, with these candle colors on, these reversals, the cyans and the magentas, are a lot clearer. It's just these colors are just brighter in general. So I do leave the colors on for this chart where I have the overlays. I leave them on. For this chart, I don't want to leave them on because I want to see red and green candles, just your regular candles. So that I know if the close is above the open or if it's below the open. And I don't want to see the 2s either because it just gets kind of crowded. I really want the 1s and the 3s to stand out. So I do want strat numbers. I don't want 2s. I don't need to see the legend, but if you're still learning these colors and you're using them, you can leave the legend. I'm going to turn off the legend. I do want alerts, and I do want to be alerted to regular reversals. So use alerts is going to alert you to actionable signals, and alert reversals is going to alert you to every reversal. And then paint candles, no. Okay, so we go over here. These settings are for the hammers and for the shooting stars. I would say play around with them, but not yet. I'm going to post another study that only uses this code for the hammers and the stars to paint hammers and stars. So you'll see every other candle will be gray, and then you'll see a hammer or a star if it's some bright color that really stands out. And that's going to give you, I'm going to post that up here at some point. I'm going to post that over here so that you can play around with these settings and you can see if you're making it more or less sensitive to hammers or stars, to be able to detect when that happens. And then you can use whatever settings you find are the most ideal on that study. You can go ahead and use those here. Otherwise, you're really not going to know what kind of results you're getting when you're moving around, when you're moving these settings around. Just so you know, I'm using the code that was automatically generated under patterns for candlesticks for the hammer and the shooting star. I just basically adapted that code to this study. The range, length, and measured move sensitivity. The measured move component of the actionable signal code considers anything when there's a 2 in either direction that is, in this case, 50%. I'm going to reduce that sensitivity a little bit to, let's say, 35%. If it is at least 35% larger than the average true range of, in this case, the last 13 candles, let's just say the last 12 or the last 10, then if there's a 1 after that and a 2 in the same direction, it tells you that there's going to be that's a measured move in one direction or the other. So that's what those two settings are. And then the simple, just for the moving average, the type of average that is used in the ATR calculation. And that's it. Once you've got those set, you can set it as a default, so you don't have to keep messing around with that. Click OK, apply. And now you've got everything set up with alerts. And those alerts include basic reversals, rev strat, as well as actionable signals. And the actionable signals here, here's the code for the hammer. Here's the code for the star. The actionable signals are inside up or inside down, kicking bull, kicking bear, hammer reversal, shooter reversal, momentum star, momentum hammer, and measured up, measured move up, measured move down. Those are the actionable signals that are coded into this study. And there are alerts that tell you what's happening, hopefully, when it happens. And actually, I've been playing with this for a while now, and it is set to alert you immediately when the condition is met. For example, let's look at the inside. Inside up is coded this way. The previous bar was an inside bar. As soon as close crosses above the high of the previous bar and close stays above the high of the previous bar, we get an alert. And that is the case with all of the alerts that I've been seeing. Just one more thing I want you to notice is when you get an alert, and let's say it flashes up here so quick you didn't really get a chance to read what it says. If you're ever in doubt, you can just go over here to messages, and you can scroll to the most recent one, which I guess would be here, and that'll tell you what the alert was right there. So at 1954, actually that's wrong. You'd have to go all the way to there we go, at 12:27, and you'd get an alert. You'd say, oh, what was that last alert? Okay, so 12:27 down at the bottom here was a bull reversal, 2 down, 1 up, 2 up on the 1 minute chart, which is the chart that I have here. And so, yeah, and that's it. And this chart that you're looking at here is these overlay studies, not the same as this overlay study. This one looks like actual candles. It has a high and a low and a body, and the basic 4 reversals. The one I'm talking about is one of these, and there's 4 of them. So you'll need 1 for each time frame, and that's the one you see here. And in this case, what you see is, again, this black box is the 1 hour. There, I'm highlighting the 1 hour. The one I'm highlighting now is the half hour. The one I'm highlighting now is the 15-minute. And that one right there is the 5-minute. And each one has its open level, which is either red or green, depending on if price is above or below, or if it closed above or below that level. And then there is the time frame continuity portion, where you have, like here, full time frame continuity to the downside, but because we went below what was at the time the lowest open. And now this becomes the highest open, and that becomes the lowest open, and so on and so forth. Um, this is a chart that will also work, although not as well, and I'll show you in a minute. Um, this chart has each one of those gray candles overlays, time frame continuity, and then the remix study. Um, and actually, this needs to be the remix study. There you go. Show legend, no. Alerts, yes, yes. Paint candles, yes. For this chart. And so this chart here actually works pretty well for the full time frame component as well, because this is the intraday, right? You've got the 1 hour, 30-minute, 15-minute, 5-minute. But if you were to do this on a full time frame as well, you would see that it works. Oh, in there, you'd see that full time frame continuity to the downside continues as the 1 hour goes 2, 1, 1, 2 down. There you go. And this is why I like this, because I can very clearly see all of these time frames at once. See, we had the 1 hour that went 2, 1, 1, 2 down. What happened to the 30 minutes? We had a 3, 1, 2 down. So we got a reversal on the 30-minute before that happened. What happened to the 15-minute? We got a reversal on the 15-minute. 2 up, 2 down, reversal on the 15-minute right there. You see it? And then what about the 5 minutes? Same. We had a 1, 3, 2 down, 2 down. So a 3, 2, 2. So we would have got in right about there. We would have watched it reverse on us a little bit, but we would have been in the trade and we could have added there. Anyways, I digress. The whole point of what I was trying to tell you is that you can go over here and use this same overlay for a higher time frame. So let's go ahead and make the chart a 1 hour, and we've got the 1 hour, so we'll need the daily, and we will need the weekly. And we're going to look at the monthly. And actually, yeah, let's leave it like that. We'll remove the 1 hour. We're going to reset this time frame continuity study because we're not looking at the 1 minute anymore, or the 5 minute, or the 15-minute, or the 30, or the 60. But we are looking at the daily, the weekly. Oh yeah, we're looking at the 60-minute, the daily, and the weekly, and the monthly. All right, so that's the higher time frames. And the thing to remember here, and actually let's add some data to this chart since we're going to go all the way out to the monthly. Let's do 90 days. The thing to remember here, and I want to point this out, is so here we have the big bars, the big, shaded area. Here's the 1 month. Each one of those is a 1 week, and each one of the individual, the little smaller ones, here's a day. And then if we zoom in, we'd see each candle is an hour. Notice, however, on this study, see how this overlaps like this? The reason for that is because calendars are not symmetrical. So like the beginning of this month, which was there, it's actually there, is the 1st, but it wasn't the Monday. Monday was the 31st of the previous month. So that's why those overlap like that. And I think that may also be the reason why some of those watch list columns are not working right. I have yet to find a solution to that. But keep in mind that when you look at this overlay like this, you're going to get this overlap where the calendar month begins there, but the calendar week began there. And so you'll see a little bit of overlap. But remember, when it comes to time frame continuity, and when it comes to these higher time frames, it's kind of like Darvas box. You're looking at um, candle addition. All of those candles together make up that one bar here. So whether the high is there or the high is there, it's still a two up for the next week, or three in this case for the next week. But this is another way that you can see, or like right here, this week got cut in half between this month and this month. So make of it what you will. I know that there's some folks on Use Think Script that are coming up with ways to not have this show up like this. I don't mind it. So I'm not going to change it. I don't mind looking at it like this. It's still showing me what I need to know, which is we had a 3 week, two down, three, two down, two up, two up, two up. Looking to go two down here on the 1 month for the bar, and it does coincide pretty much with if you were to look at the candles here. And so I guess that's basically it. Um, if you have any questions, leave them in the comments, and I hope you enjoyed this video.